I'm Chartered, your accounting tutor. Let's continue. In today's video and class, we are going to continue on financial accounting, which is trading account, which is one of the statements prepared by a sole trader. Now, I'm going to show you how the format of trading account is being prepared. Mind you, in the previous video, I told you that the statement is divided into sections, and the first section is trading account, and this is the format, whereby you have trading account for the year ended December 2025. Here we're only looking at trading account, and that is why the heading even stand clear that trading account for the year ended, because an examiner can ask you to prepare only trading account. It is only when they are combined that you have trading, profit or loss account and others. But here we are concerned with trading account. Let's look at the format. This is the format. As you can see in the previous video, I itemized all the items used in trading account, and these are the items, and it is how these items are being placed in trading account to come out with the final answer, which is either gross profit or loss, that we are going to look at it today. So here, you look at the format. This is what is called the vertical format. We have two formats. We have what is called the vertical format and the horizontal format. The vertical format is presented in this way, whereby all the accounts are just placed in one way. There's no debit and credit. Here you just place everything in this way, where 3 naira signs are being used, or you can use 2. But the most accepted, to make your work clear and well presented, you use 3 naira sign. Learners are free to you can even rule into columns, whereby the first naira sign will be column 1, the second will be column 2. You have 3 columns, and all the naira signs stand on each of the columns. But professionally, even without drawing the column, you can still maintain the figures as they stand on each of the naira sign, and it's very, very correct. I'm not drawing the columns because I want you to also go professionally, whereby without the columns, you can still prepare. But using the column is also 100% correct. Let's see how these figures are presented. First, we always start with sales. As you can see, the arrow is pointing on the last naira sign. This is what is called the format. I want to emphasize. Format means you place the items or the figures where they're supposed to be. That's what's called format. Don't change it. Not that sometimes you put on the first naira sign, sometimes you put second, sometimes you put third. No. The format is saying that place the figures the way you see here on the board. So here, sales is being placed. The sales figure picks from the trial balance, which will be given by the examiner. You know, the examiner will give you a trial balance. And inside the trial balance, there will be a host of items. Sales, non-current assets, liabilities, everything will be found in trial balance. It's just for you to know the items you are going to identify that goes to trading and come and place it in the way they're supposed to be with the respective figures in the trading account. That is what is called format. Don't like the road. You must follow the road through getting down to the gross profit. So sales is found in the last naira sign. The figure S here is standing. Any S you see here standing on the figures that you pick. You remove the S, you pick the real figures you see in a given question or trial balance. So any S means remove me and then put a figure, and that is the meaning of the X standing there. So sales is placed on the second naira, on the last naira sign, I mean to say. The second one is what is called sales return, or what is called returns inward. It's placed directly under the sales. Then anywhere in accounting you see an S or a figure put in bracket under a given figure in accounting, it means deduction. Deduction. Don't put a practical minus in this case. No, it's not accepted. Putting a figure into bracket means deduction, subtraction. So it means sales returns will be subtracted from the value of sales there. And what you have difference is what is called net sales in accounting. After you remove sales return out of sales, what you have is called the net sales. So getting the net sales, you have finished the other aspect of it, where I says sales minus cost of sales give you gross profit. So this is the final sales that will be waiting for cost of sales to give you gross profit. Then let's see it. The next of anyone what is called cost of sales. Cost of sales. Which some we call it cost of goods sold. But the appropriate heading is called cost of sales because direct expenses are involved. If direct expenses are not involved, the right heading will be cost of goods sold. But when direct expenses are involved, you must call it cost of sales. That is when other direct expenses are involved. So in this format, direct expenses are involved in the format. So the right heading here is not cost of goods sold, but cost of sales. The other cost of sales, and mind you, you must underline everything you see as a format. Follow it and don't check anything and get it 100% correct. So here, the cost of sales as a heading, well, all the arrangement or down here is to enable us get cost of sales. From here, in getting cost of sales, we start with our opening inventory. And mind you, opening inventory is placed in the middle, the other side. I'm using arrows to guide you. Not that when you are preparing the recess or you'll be using arrows. No, the arrows are not allowed when you are preparing the real one. Just to tell you as a learner, this is where it's supposed to be. This is where it's supposed to be. That is why the arrows are in the format. Not that when you are preparing the recess of it, you include arrows. It's not accepted. The opening inventory is placed, as you can see the arrow guiding you, on the middle narrow side, standing alone. Then after that, you now come to the other item, which is purchases. Purchases and the related item that follows it or just it. Then coming here, you see purchases placed on the first narrow side. The after purchases, you less your returns outward because purchases are made. Then after that, the available purchases that are supposed to be sold, some are being returned back. That will say that it will reduce the quantity or the value of purchases. And that is why it's in bracket. Mike, I've already explained. Anytime you see bracket, it means deduction. You just have to do everything in one row. Then from there, you deduct to able to get what you want. Just put everything in one. Not that after you draw line and put answer. No. Just arrange everything and do the arithmetic one time. It will give you the correct answer. Next is what is called carriage inward. Here, carriage inward is not in bracket. It means we are to add. Then the last one is goods withdrawn for private use. Mind you, I told you that goods withdrawn for private use will affect purchases. The purchases that were available after returning some, the orders are still taken by the owner for private use. It means they will reduce the value of purchases. So principally at the foundation level, these are the three elements that affect purchases commonly. The return outward, carriage inward, and goods withdrawn affect purchases. So by way of adjusting, you are minusing return outward from purchases, you are adding carriage inward or carriage of purchases, you're also deducting goods withdrawn for personal use from purchases available to be able to get the final value of purchases. And you are right to call this figure net purchase. Net purchase means purchases that after all the adjustment or the deduction or the addition have been made, then the final purchases without any adjustment is called net purchases. So these are net purchases. So as you can see, this is the opening inventory. Goods that were available for sale at the beginning of the year. So now, they were not enough for the business to trade. So the business now go out to purchase more goods, which is the purchases, and all this adjustment were on the purchases. So finally, these are the good, the net purchases are available. So look at the arrow. Are the goods that were available at the beginning of the year, which is open inventory, with the net purchases, the new goods purchased in the market, when you add them together, you get this. Getting this is what's called goods, cost of goods for sale. This is the cost of goods that are available for sale. So I will call it cost of goods available for sale. But to cut it short, you just call it cost of goods for sale. These are the cost of goods for sale. You must just say available. Sometimes goods will be available, but will not be for sale. Just like filling station, they have fuel. You know that it's there, but not for sale. So all we know that this is just like saying cost of goods for sale. So now, this is cost of goods for sale, which is the simple definition is add opening inventory with the final net purchases. What we get become the cost of goods for sale, or you can still call it cost of goods available for sale if you prefer to call it that way. So next, this is goods that were available for sale, and finally, were they sold or no? That is why we have closing inventory. That the goods that were available for sale, they were not sold or at the end of the year. So some were still remaining, and that's what we call closing inventory. So if you deduct closing inventory from goods that were available for sale or they are for sale, then it means you have the cost of goods sold. That is, the goods that were sold is the one, if you remove the ones that were not sold, then you have the one that were sold. I know the cost of goods sold is this. Then, as I was trying to explain, if there was no direct expenses, this figure is called cost of goods sold. The heading will be cost of goods sold. But now, we are telling you that After getting cost of goods sold, before we arrive at the final cost of sales, certain expenses were added to the cost of sales, to the cost of goods sold, which we call them direct expenses. Direct expenses. And direct expenses are already things like wages, royalties, and import and others that directly related to the goods that were sold. So look at here, after getting your cost of goods sold, you now bring your direct expenses, which is either wages or anything given by the question or practically what you have in the business. So adding it to the cost of goods sold, we finally give you this figure. And this figure here is what is called cost of sales. You mustn't put a name to it, cost of sales again, because the heading is already defining that from here to here, you are trying to look at cost of sales. That's why there's a heading. Some lenders will still come and say cost of sales. No, it's repetition. The heading is already defining cost of sales. So getting cost of sales, you mustn't come and say cost of sales because it becomes repetition. And that is why this figure here is the cost of sales we're talking about. So getting cost of sales, you now deduct cost of sales from the net sales to get your gross profit. And that is the definition of trading. A situation whereby you minus the sales from cost of sales or cost of goods sold to get your gross profit. I'm putting gross profit or loss because if the net sales is greater than the cost of sales, it becomes gross profit. But a situation whereby the net sales is less than the cost of sales, then this will be gross loss. So it can either result can end up to be either a gross profit when the net sales is more than the cost of sales, or it will net a gross loss when the net sales is less than cost of sales. Please don't forget to follow my video because this is just the beginning of trading account. We are going to continue by treating profit or loss account and other comprehensive income. We go ahead and handle all the financial segment of a sole trader. So as you follow me, you are going to get more. Don't forget to like my video, comment and share. If there's any question where you're not clear, don't forget to go down the comment section, ask your question, and me available for you to come and explain it to the lowest level, even more than what I'm doing, to enable you understand. Thank you. I remain chattered.